Hello and welcome to Cboe Volatility 411. My name is Dan Deming and I'm with KKM Financial. While we're seeing the SPX coming off the highs, and with that we're seeing the VIX coming off the lows. VIX cash 1209 low this morning, 1240 currently. We did see a high of 1639 for the week. That was a couple days ago, and we saw the market realize some geopolitical concerns overnight, but nonetheless able to maintain the upward trajectory. And I think it is very interesting to see how options traders are discounting that geopolitical concerns and taking more cues from the price action as far as the equity markets continuing to gain to all-time highs. Looking at expiration, I want to point out VIX expiration post SPX expiration. SPX expiration next Friday morning, a week from today, VIX the following Wednesday, so something to keep in mind. Roll market, pretty steep. As we see the VIX cash pushing down here, we're seeing about $2.10 in that roll market between January, February. January future right around the 1345 level, February future right around the 1555 level. So again, some steepness there, and I think it's going to be interesting to see how that plays into the ETNs and ETPs based off the VIX futures the next couple of weeks. Looking at VVIX, measure implied volatility in the VIX options, down around 87. That's about the low end of the range really for the last week and for 2020. I think it's very interesting to see the dynamics within the trading structure. A lot of options activity here continuing. I know Mike Palmer pointed out yesterday, the 50-cent trader came back in. That was the second day in a row, folks. I just want to point out, 24s yesterday, 25s the day before. In February, we're purchased 75,000 of each. Also, today, January, February put spread, 12.5 put spread traded 25,000 times, so some rolling positions there. We're also seeing some January calls being purchased. 1820 call spread was bought today. Let's go to March. We're seeing March options action as well. March call stupid traded. I believe it was the 25-26 March call stupid that was purchased 20,000 times a piece. That means they bought both the 25s and the 26s in March. Next week, expiration, as I pointed out, for most of the major indexes. And also we have some news items. We're getting into heart of data points, and we got PPI, CPI, as well as retail sales next week, which can influence the vol structure as we see these equity markets continuing to realize all-time highs.